right, so we're doing some training right now. We're kind of looking like at a renewal quote. We're doing training with a new team member, and we're just trying to unpack like, okay, well, what do we do? Where do we go? What does this look like? So another member of the team just emailed and said, hey, this email or this renewal is coming up March 28th. We need to work on it. Okay, and so obviously, we're here at the 22nd. So yeah, we definitely need to. Okay, so I'm just scrolling down for context to try and get a little more info. Okay, which I'd always recommend, right? Like, okay, was there anything else that the account manager put in there that would be helpful for you? So I can see here that this is customer's name, Joseph Bracco. Here's the renewal quote. Please see attached renewal quote for the above insured. Due to rate increase, I'll be firing remarket options shortly. Please review the quote. Contact me. Okay. And then this is an underwriter, and he's with NBS. NBS is called Nationwide Brokerage, which is a branch of Nationwide that does underwriting MGA work. So think excess and surplus. So we've got like Nationwide Maine, where there's like Nationwide, hey, Nationwide, we're on your side 100%, blah, blah, blah. You can quote direct. And then we've got here, Nationwide that also acts as brokerage. So to be clear, I can go to Nationwide Brokerage and get all sorts of different carriers that aren't Nationwide. You follow me? Which I know it sounds a little confusing, but I could go to, in fact, one of my larger clients is through Nationwide Brokerage, but it's Liberty Mutual. Go figure, right? It's technically State Auto, but they got bought by Liberty Mutual. But so just think of it, they're similar to like a Bass or Whole, if you've heard some of those names. There's some of our larger Bass, Whole, Amwins, RT Specialty, some of our larger underwriters. And again, I think this is important just for the training here. If we also sort of say, think very simply wholesale and retail. I think this is a good analogy. I don't know if you've heard this before, but I want to put this out here is thinking about when we're dealing with underwriters, you'll hear the term either underwriter, you may hear the term broker, you may hear the term MGA, which stands for managing general agent. All those are sort of synonyms. At the end of the day, they are truly wholesalers, right? And if we just think very simple, retail versus wholesale, the wholesaler inherently does not deal with the client. The wholesaler deals with us as the agent. We are the retail agent. The client and the end user, we work together. We go through the wholesaler to get the quotes. Again, in a different analogy, like I go to Publix and I buy Chiquita bananas. I bought the bananas directly from Publix. Publix is likely dealing with Chiquita banana wholesaler that's selling them their bananas. You with me? It's the same thing in insurance where you've got wholesalers and retailers. And again, this world of excess and surplus, non-admitted, traditionally you're dealing with a wholesaler. Okay? So let's look at the quote. This should give us some good info. So we'll pull up the quote here. And it says, commercial insurance proposal with Scottsdale Insurance. Now, for what it's worth, Scottsdale Insurance happens to be owned by Nationwide. Okay, so you may see the term Scottsdale, but they're actually owned by Nationwide. Okay, and to be clear, Nationwide Brokerage, they still offer Nationwide products in addition to some of their other carriers. Okay, now the business is called Joseph Baracco DBA Buy Golf Clubs. Okay, so never heard of this guy before, but obviously I'm thinking it's got something to do with golf. This is giving me a premium summary here. Okay, so I can see premiums about $5,600 right now. Okay. Then I go down here and I see the commercial liability. Okay, so I've got 1 million, 2 million liability. And I'm going to go down a little bit further. Normally on most proposals, if you actually look through them, and there can be a lot of info on these, and the same thing with the policies, but there's a lot of info, but it can also be if you actually take the time and look through it, it's very logical. They will normally tell you like what the exposure is and what it's rated on. Okay, so if I go down further here, it says sporting good or athletic equipment stores. And we talked earlier just doing some training, and we talked about how it's based on primarily commercial insurance is based normally either on sales, square footage, or payroll. There are some outliers. I'm not going to get into all that on some of the one-offs. Just I would say 90% of the insurance world, you're based on those three things. Okay. So now I'm scrolling down here. Now I also see it says dwelling, 2-family, lesser's risk only. This would be one of those where if you look and under the exposure column, it says 1 per dwelling. So this sort of indicates 1 unit, not necessarily a sales-driven scenario. So, okay, maybe the guy bought a building, maybe bought a little building, and he's got his equipment in there, and then maybe he rents part of the other building out, is sort of what I'm picturing in my head. You know, maybe it's like retail downstairs, upstairs is, you know, some sort of housing would be my guess. Okay. We've got on here a mortgagee, so that's important to know. So if we look, we see it says additional insured mortgagee is Center State Bank. So he has a mortgage on it. Okay. Now, and Sherry, who I'm doing training with, that's kind of the world she came from. This is the beauty of, and the tie between insurance and mortgages is like, you talk about job security. Banks don't give money to clients unless they know that they've got insurance, right? So that's also important because that's going to tell us as we're navigating the world, and, you know, at the time of this video, we're 2023, the Florida property market is very challenging. But when someone has a mortgage, they're going to have wind coverage. It's not an option. When they've got a mortgage, they have to have it. The bank will not let them not to. Okay. Now I scroll down and I look at the rating for the property. So now we've got property. Now property is normally based on construction type, like is it block? Is it frame? Frame is wood, block is normally joisted masonry or concrete block, something like that. Traditionally, not traditionally, this is how it is. The block does not burn as quick as frame, and they will get a better rate. Okay, and they will also normally need a little bit more coverage because it costs a little bit more to rebuild. And then that just goes up from there. So if we think very simply, if we have like, you know, a building that's just wood frame construction versus a building that's brick, and then also maybe compare that to like a commercial building that's 10 stories high and it's poured concrete all the way up. Poured concrete is going to be the most expensive, but it's also going to be the most fire resistive. So there's a little bit of a swing there. They're going to need a little bit more coverage, but they're also going to get a little bit slightly better rate on the coverage. Okay, so joisted masonry built in 1974 with wind, 5% deductible, $5,000 standard deductible. That's what these numbers are basically telling me here. So that's saying, okay, we've got a 5% wind deductible, $5,000. ST, you'll see standard. Sometimes you'll see AOP, which means all other perils. AOP and all other perils is anything other than wind. So what does that mean? Well, let's think about what are the other things that can happen to buildings. Like there's a fire, a pipe breaks and causes a flood, a truck runs into the building, you know, all those sorts of things. Okay, anything other than wind. All right, so I'm going to go down a little bit further. So now I see the building, okay, and now I see replacement cost, and I see $80,000. Okay, so again, that's telling me it's probably a pretty small building. Okay, and then on the, if I go down a little bit further, the second building here, so this is telling me building 1 of 2, so it looks like there's 2. Okay, here it's showing me $120,000 on the second building, right? So again, we're kind of picturing like he's maybe got his little golf club, golf shack, if you will, and then the residential part. Okay, and then I scroll down from here, and you're going to see a bunch of forms and endorsements. Now, frankly, if you click on any of these, it normally will take you to a hyperlink. Some of the carriers will do this, and it will literally tell you what the form is. Okay, for our purposes right now, we don't need to kind of go through all of that. Okay, we're just trying to get our arms around like high level, like what do we have here? Okay, now again, for just keeping things very, very simple, what are we trying to do? We need to get this to the client, and we need to help him understand what his options are, and him being able to secure coverage. And again, unfortunately, this is just taking a little bit longer here. A couple things. He also said in the email he'll be remarketing it and sending us other options. Now we'll have to follow up. I don't know whether we got other options or not. Okay, so we'll kind of have to follow up on that. But what I'm going to do for now is I'm going to say, okay, well, I want to take a look and see what did his rate look like last year. So where could I find that info? So I'm going to go in here. I'm going to go into logging into AMS. And then okay, and then I'm going to type in Joseph Baraka. Let's see here. Type it in right. Joseph Baraka, and it's DBA by golf club. So I'm thinking Baraka. Let's see if anything comes up. So it may be under the DBA by golf clubs. Okay. So I did find it like that. Now, let's say you were really stuck and we didn't even find it there. Keep in mind, we did a system conversion last year. So we've been in this new system AMS for less than a year. The other thing that I would do, and it will also give us some historical context, is I can go into EasyLinks. So EasyLinks was our other management system you've heard about. You've got to log in. Okay. You don't. You should have, because I thought you had Phyllis's. She said you don't have that?
Said I didn't need it.
Okay. Okay. I definitely want you to have that. So again, just for context here, EasyLinks was our prior management system, and it's super helpful. I'm going to be honest, okay? Because this is where we were at for several years. Now, ideally, when we did the conversion, everything that was in EasyLinks was supposed to get an AMS, okay? And moving forward, everything needs to get an AMS, but EasyLinks can still provide us some info if we're really stuck. Bingo. And so that's what I would say. Like, and again, I'm trying to use the standard of if I go back here and I did not find... and I was unable to find Joseph Baraka, okay, that, which again, I seem to struggle with spelling his name, and that's right, under here it's under the DBA. If I was unable to find that, I could then go into EasyLinks and get info. And frankly, at this point in time, it's probably good just doing that anyway. Now, what I will say is obviously, if we look in here and we say, okay, well, last year, he paid about $2,800, right? And this is not uncommon what we're experiencing in the insurance market right now. Not uncommon at all. He's also 3409 Bahia Vista Street. I would caution you as you're looking at insurance and you're looking at exposures and risks, keep in mind, and this is big for commercial insurance, the mailing address and the physical address aren't always the same. Now, sometimes they are, but sometimes they're not. I think in this case it is, but that's one where it may not always be. Now, and again, I've seen enough of these to see sometimes you'll see stuff in here, sometimes you won't, depending on how the conversion went. But this can be a very helpful thing, just being an AMS right now. This little guy here, I don't know if you've seen this, where it says deck page view. Okay. So I click on deck page view for those of you playing at home that haven't seen it. And I scroll down here. It's basically going to give me a summary of the policy. And that's in essence what a deck page is. A deck page is a summary of the policy. And if I scroll down here, it's again going to kind of give me a summary of what we've got. Okay. So 1 million, 2 million liability. We already talked about this. And it looks like his sales was only about 35,000. And again, I buy golf clubs, so clearly this is a guy who probably is maybe buying golf clubs and then reselling them, right? Okay, and then we've got info on the building, so 3409 by Vista. Again, we saw some of this on the proposal, but I'm just trying to also illustrate that, you know, we can see this in a variety of different places, okay? And and then if we go down from here, it's going to show us the second location. It's going to show me some building updates. It's going to show me some square footages as well, right? We noticed on that one, the building coverage was only 80,000, but it looks like the first building is only 544 square feet. It's a pretty small building, right? So again, right now we're just trying to kind of get our arms around, like, what am I looking at? And obviously I know, you know, we're taking extra time here because we're doing training, but this would be the thought process. Like, if I've never seen anything before, I need to at least understand it a little bit. Right? Okay. So let's say this wasn't in here, and let's say we really didn't know much about the coverage. The other thing that I would say would be a couple things, and I think this is important as well. I would say I would go to Google, and I would type in the address, because one of the things is a picture's worth 1,000 words. I want to actually see the building. That's going to help you a lot, right? So, and again, this really, I think, is a great example of, kind of the picture painting 1,000 words. I mean, we can see here, Pinecraft Golf Shop. So this guy's got a little golf shop here. And then my guess, and it's kind of hard to see, I'm not going to fuss a whole lot with it. I'm not the best with all the navigating with Google. It's kind of giving me a hard time here. But my guess is, maybe here, is that this building, though, you can kind of see it here, is the second building that we're likely insuring. So it's probably like, hey, he has his little golf business here, and then he has this little second building here that he rents out, and that's his business. And that's literally what we're insuring. Now, the challenge is his rate's gone from, his rate's doubled, frankly. But right now in the Florida insurance market, given everything, that's really not that bad. And then part of what you guys and what we all need to do is then, kind of explain and sort of unpack to the client as you start navigating this world more. And again, I'm big on this. I'm holding this up for the video camera here. Okay. I'm for Sherry, who's with me in the office. You can see I even have it on mine. This is something we came across a few years ago, and it's called Lear. It's called the Lear method. And in any communication, whether it's good communication or tough communication, whatever's going on, you can use this. Lear stands for listen, empathize, ask, resolve, right? If we just think of in general, when people are good communicators, they're doing this. Now, you may not know it, but they are doing something very similar to this. So you'd want to listen. It could be, hey, Mr. Client, I've got your renewal. Unfortunately, your rate went up. The Florida market is incredibly challenging. Right now, this is the best option. Oh, what do you mean? I can't believe that. I can't afford. This is so hard. Hey, I am so sorry. I understand. My rates are the same. We deal with this all the time. In fact, and this is something you can share, the owner of this agency has been in the business here 20 years, and this is by far the most challenging market. Most people in Florida right now, if they've got a pulse at all, they kind of know that. In terms of resources, I would also highlight we've got some resources that you can point people to that you can use yourself. And if you have not seen this before, and this may have been in your very, very first few days, I don't know, or maybe not, I created a toolbox on our website. Okay. So, and the whole purpose of the toolbox is just to give us good access to info. So it's got links to trainings. It's got links to all sorts of different things. Okay. And one of the ones we have right here is we just created, and we call it Insurance Rates on the Rise. Okay. And you've got right here, now granted this was from 2022, but it really just kind of paints the picture of what the insurance market's like and why it's gone up so much. I think because I do think this is an important thing just to touch on right now, I think if we just sort of keep it very, very simple, and we say, Florida has had more hurricanes in the last several years than ever before. Hurricane Ian alone, and that's probably the freshest in people's minds. Hurricane Ian alone, which happened last September, the damage reports still aren't finalized yet, but they're somewhere north of $60 billion with a B, right? That alone right there paints the picture, right? I could get into more and talk about reinsurance and legislative issues and assignment of benefit fraud and on and on and on. And again, there is no shortage of resources or info like on this. You can also, if you want, and you're looking for resources on this, or you're trying to just get yourself educated on sort of the insurance market in Florida, on our website, both our internal Facebook page and also our front-facing page for our clients, we have several links and posts to what's going on in the Florida insurance market. Okay, and now some of this you'd have to scan down because we have all other sorts of posts as well. But if you scroll down through our website here and you look, you will see info on flood insurance increases. This was New Year's. We've got a lot here. I'm going back a little bit. Okay, here's probably one of the last ones. Florida legislature, some of the things that have gone on, and this has been an ever-evolving thing. The other one that I'm just going to highlight right now that I personally use is there's an article from bankrate.com, bankrate.com, Florida insurance crisis. And I think this is very telling. Okay, so this was literally from bankrate.com, which is not an insurance-specific company or website. And it's basically saying, can lawmakers save the collapsing Florida home insurance market? Now, a lot of this focuses on homeowners, but the challenge for commercial is just as big, just as challenging. Okay. And so for now, what I'm going to do, I'm going to actually share. I'm just going to send you this. I'm going to put it into Teams so you have it easy. I think that's a good one just to have that you can reference. This is something very practical you can share with clients. Again, going through the listen, empathize, we kind of did the first two parts. Ask, have there been any changes, anything that we maybe don't know about, upgrades? I got a new roof, I got something, I expanded my building, I added square footage, anything like that, and then resolve, and then what can we do? So, we're really in a situation here, and with this, based on, 1974 joisted masonry construction in Sarasota, right? And so think about that. Sarasota was very, very close to where the storm was supposed to hit, right? The other thing that I would look at real quick, distance to coast. There's a distance to coast calculator. So if you ever want to just sort of get an idea, you can look up, and there's a variety of them, but you can look up distance to coast. You can plug an address in, and it will show you literally how close to the water is. So I'm pretty confident that based on the name of this is going to be fairly close to the water. So the other thing, just very simply, we explain to people is again, you don't have to be like an insurance, expert on this type of thing to sort of understand that how close to the coast. And again, this is not exactly the one I was looking for. Some of them will literally spell it out, but we're getting an idea that it's probably right around here from the original search. And we're probably less than 2 miles from the coast. Okay. And again, there are other websites you could, poke around and find a little bit probably easier than this one specifically. But just the idea of the closer to the coast I am, the more expensive it's going to be because there's higher risk there. Okay. So, a few things just as we kind of wrap up, and we've sort of analyzed this, and we would say, what else could we do? Now, the other thing is there's no doubt we sort of tier based on how big an account is, what we do with it. Right now, if this was like a $50,000 policy, I would say, yes, let's send it out everywhere because it's a smaller policy. And I know there's not going to be a whole lot of appetite for it. It's probably not going to do a lot of good. And some of that is if you're unclear or unsure, like, hey, should I shop this? Should I not? What should I do? Certainly you can ask me. You could ask Phyllis, ask someone else on the team. Okay, that's been doing this a little bit longer. But I can just say very high level, it's not going to, there's not going to be a lot more options. And I hate to say it like this, but when we also explain it to a client, we would say something like, I'm just glad we're able to still maintain wind coverage. We have clients right now, and this is true, where like Lloyd's of London has said, no, we don't want to renew you with wind at all. So, and again, I know that's very hard, but that is some of the reality. If we just sort of think of that kind of empathize part and understanding, wow, there's no doubt that this is expensive. If they did not have a mortgage on it, what could we do? Any thought? What else could we do? We kind of said it in the beginning, but when I have a mortgage, I have to have a very specific coverage. Right. If I don't have a mortgage, I could take wind off. Right. Now, if I were to look, part of this property premium, it doesn't break down what the wind cost is versus the non-wind cost, but there's no doubt that most of the cost is inherently from the wind. Okay. If I were to high level it, maybe it would cut the rate in half, ballpark. There's still going to be an exposure and a risk to say, well, what if the building catches fire? What if it's vandalized? What if a pipe breaks and causes a flood? What if a truck runs into the building? What if there's a lightning strike? What if there's anything else then, right? That's the type of thing that you could talk to a client about and talk through with them. Again, because we know he's got a mortgage and said it very clearly on a few spots, that's not an option. Okay. What is an option would be financing. So that means the client does not have to pay in full. I have a separate video on that. I don't know. Have you seen any of that or heard of finance proposals? You haven't seen it. Okay. So I'm going to briefly do a finance proposal here. There is a separate video on that, but I do think that this is important to sort of tie all this together. So if I go in here, I'm going to go into our password list. I'm going to go into financing, and I'm going to go into first insurance funding. And it even says main financing for E&S policies. And that's who we primarily use. So if we think about this for a second, when a company is excess and surplus, inherently, they do not provide monthly billing. So basically what Scottsdale Insurance is going to say, hey, here's the deal. You want to do business here. We want $56.80 and 31 cents. Okay. So the client can pay in full. Now that's a lot of money for a lot of people, but a lot of people can't pay in full. And when it's excess and surplus, we then have to use a finance company. And basically what a finance company is a company that comes in and they make their money by financing insurance premiums. Now, you're not going to be able to go into Bank of America or Wells Fargo or, JP Morgan and say, hey, I want a loan on my, $6,000, insurance policy. They're going to kind of laugh at you. But there are companies that do this, and they are primarily backed by banks. They're just sort of divisions of, where it's like, no, this is all these guys do. Okay. So again, this is a way for a client to at least get to break the premium down and pay monthly. I would always encourage us to do electronic funds transfer whenever we can, whether that's with a agency bill client or with an admitted client. Even if it's an admitted client and the billing can come through Progressive, for example, or come through Travelers, I would rather have that client on an automatic renewal for finance or for payment so that there's less likelihood that they're going to lapse. Okay. So that's sort of something just in general to think about. We're going to have a much higher retention in general by setting someone up on EFT. Okay. So I'm going to go through this here and I'm going to put in basically the info that I see on the quote is what I'm going to put in here. There's a couple things to highlight. If we look, you see there's property insurance, which is $47.56. The liability is peanuts, right? The liability is $500. Okay, relatively speaking. I mean, again, I'm not trying to minimize, but compared to the two, it's significantly smaller. And if you even see here, MP, that stands for minimum premium. Basically, they're saying, look, the least we're going to charge you is $500. We don't care what you're doing. And again, you got to think like, okay, well, if I go into the guy's golf shop and I slip and fall on a golf ball, could happen, and I really hurt myself and I sue, that liability is what's going to pick it up. You're then going to see a policy fee of $150. Now, for what it's worth, and if we don't get asked these questions often, but again, I want to unpack and I want to explain this is important. Well, like, whose policy fee is that? That does not go to us as the agent. Frankly, that is part of how Nationwide Brokerage makes their money. You follow me? So part of their service is saying, look, well, we're doing the work. We're going to Scottsdale, blah, 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 blah. And I'm sure they're getting others than just $150. They're probably getting higher. Most of it is the commissions, maybe 15, 17%. They give us 10. They keep 5. So they're actually doing more with less or having to do more volume with less. And then they add a policy fee to it. Okay. So any questions, keep me posted. Okay. Okay. So that's the policy fee. Now, surplus lines tax. You're like, well, what the heck is surplus lines tax? Surplus lines tax in the state of Florida, and each state has their own guidelines, it is approximately 5% of the total premium. Okay. Now, the carrier, the underwriter will calculate that for you. That's not something we really have to fuss with a lot. but it's basically Florida taking their pound of flesh, frankly, right? It's one of those fees. Like they joke like death and taxes are a function of life. It's really just that simple. That it's just part of it. Okay. And then you're seeing a stamping fee and a state tax fee, right? So again, those are just some of the fees. So, but those are important to understand because of how we're going to put this into the system for the financing. Okay. So I'm going to go in here now. I'm going to pull up the proposal. And honestly, a lot of this I recommend you guys just in general, and I try and do it as much as I possibly can, cut and paste. I'm sure you're familiar with, basic cutting and pasting, right? So I'm just taking the name, I'm cutting and pasting, and putting it in here. Note that they want a physical address, and even if it's a P.O. box, it cannot be a physical address. There can be a separate spot for mail, but they want a physical address. Right? And so that traditionally would be, even if it's a business and they're like, oh, I get it at my P.O. box, they're going to probably want the owner's address or something. They want a physical address. It says that's required, right? So I'm just cutting and pasting the city, the street address, and the zip code, okay? Now, if you look, it says mailing and physical address is the same. I could uncheck that and put a separate address in now for mailing, if the mailing was separate, okay? But I'm just going to put that there because it's the same, okay? Then who's the client, right? Who's the contact? A lot of this you would be able to get from the management system from, from AMS. Unfortunately, I got logged out here. Log back in, okay? And for confidentiality, I'm just going to keep that off. I don't know if I can. Off screen right now. So, but, and I'm pulling this up on my other screen, kind of the beauty of the dual monitors. And, okay, so I'm putting in the client's name. And then I'm going to even take this to the point of emailing the client so you kind of get a flavor of what that looks like, what I would say, how I would say it. Some of this will work on putting together some signature lines to make it easy so that you don't have to, sort of think through each one of like, what am I going to say and how I'm going to say it. Okay. So I put his name, his address in, all that good stuff. If the client said, yes, definitely, I want to go on ACH, right here is where the ACH info would go. Okay. There's a separate form they need to sign, but that's where that would go. Okay. For now, we're not doing that, so I'm just going to click on the next page. Of course, that deleted everything out. Okay. So I'm going to take this off over here for now. And I'm just going to redo it real quickly. Sometimes in life, that's what you got to do. Okay. So when I went to do the redoing of it, it gave me a hard time, frankly. So I'm really just putting his name in, his info, and the main contact is, okay. The next page will allow us to put in the premium info, okay. And okay. Now I'm just going to click next. Again, it gave me a hard time when I wanted to put the ACH in and then take it out. So I'm not going to do that right now. Pretty good about telling me if I didn't fill in anything. So I forgot it this time when I redid it. I didn't put the city in and I didn't put the zip code in. Okay. Now I'm going to do that. And now I'm going to click next. Okay. Now I'm on this page here. I'm going to go back here. Now I'm going to put the policy info in here. Okay. So if I look here, this is basically the finance company is saying, hey, what are we financing? Is it general liability? Is it property? Is it professional liability? Is it E&O, D&O, all that? You'll see if you look at their drop down, there's a whole bunch. Okay. Now, traditionally, when you've got property and general liability together, that's called a package. If we just had the property, it would be property. If we just had the general liability, it would be general liability, right? But when we put it together, that's normally considered a package. We don't always know the policy number, okay? So if I don't know the policy number, I just put in TBA, right? The system is going to require you to put something in. Now, in this case, I actually do know the policy number because it's, on a renewal of, and I see that on here. And then I'm going to put the effective date in. Now, the effective date is going to have to match the renewal date. I can't say that enough. That is super important. So whatever I see is the effective date or the proposed policy period here. So if I look here, I've got a proposed policy period, okay, 328 to 328, 23 to 24. It's going to be the effective date of 323 for the financing. It would also be that the bill will then be due on the 28th of the month, or the EFT would be due on the 28th of the month. Okay. Then it's going to ask me for the carrier. So I'm going to click my little looking glass here. You'll notice here it may say limit search to preferred entities. For now, I'm just going to uncheck that. Okay. The nationwide brokerage is probably in here, but I'm going to put nationwide brokerage. And then I'm going to click search. Okay. This can take a minute. But it should find it. And then once it does, I can certainly add it to the quote unquote preferred entities, which makes the search a little easier. And even though it's sort of frozen, it's thinking. This has gotten a lot slower, unfortunately. And
are you asking the insured first if they would like to finance, or are you?
Yeah, great question. That's a really, really good question. So Sherry's saying, hey, do you normally do the financing first? So a couple things, like I would look and say, well, I mean, historically, like, did they finance? So a lot of what you're working on is going to be existing accounts, which it's not going to be incredibly clear from AMS, but I am going to look in Easy Links here, and I'm going to kind of poke around. I'm going to take this again off. And I'm just going to try and see, like, what can I see in here? So I'm going to go into documents. So this is the old management system. You can go to a couple places. You could either look under documents or under activity. Activity is sort of the notes that got put in. Documents are the things that got saved. I'm just going to type in finance. Let's see what comes up. Okay. So we can see right here, 2FIF, which is short for First Insurance Funding, signed finance. Now that was back from 2020. So that gives me some context, right? I also, like, if I even just look here and I see back in 2022, which was just last year, it said right here, notice of acceptance for the financing. So in this case, there's no doubt we're going to offer financing. And I would certainly say we do want to be mindful, compassionate, empathetic, all we just talked about, with the rates that have gone up as much as they have, that even if clients maybe had paid in full, let's just play the game and let's say, okay, well, traditionally the premium was maybe $2,000 to $3,000, and the man or the woman wrote a check in full for that amount, but now it's doubled in $6,000. How would you feel, right? The classic thing. So, okay. The issue what happened here, and this is a good point. The first tab is actually the carrier. It was not the general agent. So this is sort of a good example of, like, why did Nationwide not come up? Okay. I'm going to go here and I'm going to type in Scottsdale. Let's see if this comes up a little more quickly too. And I also limit the preferred entities. Okay. So Scottsdale should come up here. And I've got to go in like 5 minutes, but I'm hopefully this has been helpful. Yeah. Okay, good. Okay. So woohoo. So Scottsdale came up here. Okay. Now, let's say they hadn't, and we had the limit to preferred off. There would normally be a bunch of different Scottsdales. Frankly, it doesn't matter which one you pick. And I know this sounds funny, but that's good to know, because we literally, anytime, and this is also good to know, and this is a lot of what Joyce does, and there's a whole team at Liberty that all they do all day, every day is this stuff, and it, God bless them. The accounting surrounding this is quite a bit, because we've got clients that are paying us, we've got financing involved, and then we have to pay the carrier. At the end of the day, once we bind a policy, we will get an invoice from the carrier, or I'm sorry, from the underwriter or the managing general agency, and that's what we pay off of. Okay. Now, I would certainly say keep it close. Like, if it's Scottsdale, we don't want to put in, Chubb, right? But sometimes you would see 15 different addresses. Don't drive yourself nuts over. Is it Scottsdale, Houston? Is it Scottsdale, Texas? Is it Scottsdale, whatever? Okay. So I'm going to click on Scottsdale. Now here's the general agent. Now this was the part where I typed in incorrectly at first. I'm going to type in nationwide because this is asking the general agent. We've said the general agent is the same as an underwriter, is the same as a broker, is the same as a managing general agent, is the same as the wholesaler, right? Wholesale retail. It's that side of the house, and they're trying to understand, okay, who is it? Now, it didn't come up here, so maybe we haven't put them in. Maybe it's under NBS. Let me type in NBS and see. And if we really got stuck, and it's like, well, I don't know. I can't find them. It's not getting in there. You could certainly, again, reach out to, I would always recommend, in general, reaching out to the carrier or whomever you're trying to deal with first. And I'll even show you spot on here now, but that did come up for what it's worth. So, now why nationwide when I put that in didn't, I know why, because I had it as the limited to preferred. And it's not been added to our list. So maybe it's not one that, for whatever reason, was not on there. Maybe when we merged with Liberty. But this is very simple. So if it's not been in there before and I click this little green arrow, now it says add preferred entity. Now next time it will show up there. So that was kind of good to see that. Let's say we had really gotten stuck. I can't recommend enough. Anytime you see live chat, I would use the live chat. In general, I think live chat is your best way to go. If not, I would try and call a company and I would poke around for their contact info. Okay, so now I've got the carrier, I've got the underwriter. Now I have to put the premium in. So now I'm going to put and this spot here, now this is super important. This spot here, okay, this is what we would call the raw premium. Raw premium is just that. And this is also important for us because this is what we get paid on. We don't get paid on the fees and taxes. That goes to the state of Florida, and that goes to, nationwide brokerage. So I'm going to put in the 5256. Okay. So we'll go 5256. Now, earned fees and taxes. Really the only thing that's earned is the fee. In other words, what does that mean? Well, let's say that we write the policy today and we bind this and we bind the financing, and like 2 weeks from now the guy hits the lottery. He's like, I'm canceling all my insurance. I don't need it. I want to cancel it. He's not going to get back that $150. Okay, it's fully earned. The other thing that's important to know with excess and surplus policies, and they normally say it in here, if you look, you'll hear what's known as 25% minimum earned premium. So what does that mean? That says that in general, and this is an important one to note, and it literally says it right here. Now we've crossed out the commission, but the minimum earned says 25%. So it's literally saying that same thing. It's saying, hey, if doesn't matter what happened, we're collecting a quarter of the premium. We're not giving a quarter of the premium back. Okay? Does that make sense so far? Then what I'm going to do is I'm just going to add up the surplus lines, fees, and taxes, and then I'm going to put that in the financed amount, right? So I've got here I've got 267.06 plus 3.25 plus $4. So that's $274.31. Okay. The important thing here is we want to see the total amount here match the total amount here. Okay? So that's super important. We want to see these two totals match. All right? And they do. So now I'm going to click save. Okay? That's going to show up here now. I'm then going to click next. Okay? And we're almost at the end here, which is good. We're then going to click on save one last time. And then I'm going to go to documents. And then it says generate notice premium finance agreement. I'm going to click now. And then I'm going to go up here and I'm going to save the document. I can't recommend enough in general as you're doing things. I try to save it so that it makes sense for me and makes sense for a client. The other thing that I would say is if it's a complex file, frankly, and I don't say this in a bad way, this would not be a complex file. And the more complex are, again, 10, 15, 20,000, we have lots of things that also live in SharePoint under one commercial clients. So one commercial client, you'll see lots of folders. That would be an area where you could save it temporarily. I have to save it somewhere on my computer, and ultimately needs to get an image right and AMS and all that stuff. But I don't think we've got anything in here. Hang on real quick. Hey, sweetie, I'm just wrapping up a meeting and then I'm going to be heading out. Yes, please do. Just whatever you're grab for you. And then as soon as I'm done my meeting, I'll be heading out. Okay. All right. Love you, baby. Bye-bye. Okay. All right. So, it doesn't look like we've got, I don't see under buy golf clubs or Joseph Baraka. The other thing that I recommend, and I have on my computer, I just created a folder and I call it data transfer. I learned this 15 years ago when someone was teaching me. And it's basically just a folder that I have that I know I'm saving and transfer documents. Okay. So what am I going to call this? I'm going to call it I Buy Golf Clubs Finance Proposal 2023. Now, if we didn't know anything about insurance, anything about financing, I could look at that very easily and say, oh, that must be for I Buy Clubs, this finance proposal for 2023. I can't recommend enough. The more you do that, it's going to make it easy for you and for the client. Okay. Now, the other thing that I'm going to do here, just a bit of cleanup. Okay. We are unfortunately a little bit later than I'd like to be on this renewal. And so I'm just going to clean up a few things. And when I say that, what I'm going to do is I'm going to edit the document. You should have a PDF editor. If you don't, okay, we can make sure you get that. I'm going to take the original date off there. I'm also just going to take the commission, even though it's blank. Okay. That's not something that the client certainly doesn't need to see the commission. Okay. Now, and I will say, unfortunately, again, there's just been a lot going on and some, staffing shifts and a lot of things, very challenging market. Sometimes the carriers don't get us stuff until 15 days out, 10 days out. It looks like this was a little bit sooner than that. So, unfortunately, it just didn't get processed soon enough. But what I'm going to do now is I'm going to retitle the quote from the underwriter. Okay. I'm going to save it. And I'm going to call it I Buy Golf Clubs Commercial Insurance Proposal 2023. Okay. Now I'm going to email the client. Okay. So I'm going to email the client. And here's what I'm going to do. I'm going to say, I'm going to put the subject, again, I want to make it easy. I Buy Golf Clubs Commercial Insurance 2023. And I'm going to put Joe. I'm going to add in the proposal. I'm going to add in the financing. Okay. I'm going to also add in a minute here, a little bit on the insurance market. I'm just going to put Joe. And I'm going to start off with, by the way, I'm big on say please and thank you. Okay, here's real quick, 4 referral habits I learned 20 years ago. You want to get referrals, here's easy ways. This is also kind of an anything. Say please and thank you. Start what you finish. Do what you say you're going to do. And be empathetic. Okay? Or / own it. And I'm just going to put Joe, please see attached renewal for 2023 to 2024 for I Buy Golf Clubs. I apologize. This is getting to you late. I'm putting the insurance market in Florida. Now, we don't necessarily have to explain everything that happened of like, well, why did it take on our end? But some of this stuff is just going to be very true of what's going on. The insurance market in Florida is incredibly challenging right now. I'm going to add, in fact, it's the most difficult I've seen in 20 years in the business. Couple things. Maybe if you're listening to this, you haven't been in the business 20 years, but you can say it's the hardest market that the owner of the agency's seen in his 20 years in the business, right? I learned that early on too. Like even depending on your longevity, you can kind of piggyback off of someone else's. And I'm going to put Nationwide, because that's a more known name, and then I'm going to put Scottsdale Insurance. Did offer renewal, which is good, as several carriers have withdrawn from the insurance market altogether. You have likely seen some of this on the local news or online. And I'm just going to put, you can even see link here from bankrate.com from December 2022 about the collapsing insurance market in Florida. And I'm going to probably change the word collapsing because yeah, exactly. And while that's what they say, I'm just going to put the challenging. Okay, I'm going to put the challenging insurance market. And then I'll put link there. Okay. I'll just put all that being said, I'm glad that Nationwide is renewing. We have access, and this is true, to over 35 other insurance companies who previously would consider writing wind but are not at the current time due to the insurance market and post-hurricane Ian damage. Okay, which is estimated over $60 billion. All right. Okay, and then I'll put, so attached is also the finance proposal. I like to also break down what the down payment is in here, so it's very easy and clear for them. Okay, so I'm just going to put the down payment would be $1,256. It is. It's normally the 20 or 25% down, for what it's worth. Attached is the finance proposal, which you have done in the past, and you would need to put down $1,256 and then have 10 installments of $471. Okay. And then I'll put any questions, please feel free to give me a call at thanks so much for your business. I'll put that in bold, and I'll put Sherry on our team will be sending you the application documents to e-sign as well as the invoice for down payment. Okay. I'm going to also put one other thing up here is that I'm glad they're renewing with wind. It looks like you still have a mortgage on the property. Is that correct? If so, bank requires wind coverage. Okay. All right, and then I'm going to copy CL file at, because I know, well, frankly, down the road, I'm not doing that right now because you're going to be helping me with this, and I'm going to stop the video for now because it's long enough, but this gives a good overview on a lot of things